Hi, my name is Keanna Barnes. I am with Keller Williams, and I'm going to give you 5 factors that affect your credit score. Okay. Now, there are 3 major credit bureaus that report your credit score, that keep track of your credit score. And each of these credit bureaus report your credit score differently. They are TransUnion, Equifax, and Experian. If you try to pull your credit score, not try, if you pull your credit score and you're trying to get like a house, car, something like that, you may get 3 different scores. That's because each credit bureau rates the credit differently. But they all agree on these 5 factors in rating your credit score. So you need to keep these in mind if you're looking to purchase a home, you're preparing to get any type of loan, or just keep your credit score in a place where you think it should be. Okay, in this order. Okay, number 1, the most heavily weighed on factor is your payment history. This can weigh 35 to 40% in your credit score. So you basically want to make sure that you pay your bills on time as much as possible. If you're going to be late or something's going on, maybe contact the credit company that you're paying to, so that you can make sure that this doesn't affect your credit so much so, because this does weigh heavily on your credit score. Number 2, the second factor that weighs on your credit score is your total available credit. This also contributes to your credit utilization ratio. Let me explain. The credit utilization ratio is defined as your outstanding balance versus your credit limit. Let me explain. If you have a ratio, if you have used $3,000, okay, over, and you have a $5,000 credit limit, your credit utilization ratio is 60%. This is not good. You want to keep this percentage at least 30%. Okay, 30% and below is where you want to keep it. That's where when it gets over 30%, you really start to take hits on your credit. So make sure that you use at least no more than 30% of what your available balance is of your credit. Okay, the third factor now to affect your credit is the age of your credit history. This is about 15%, so not as much as your payment history and your total available credit, but your credit history. Now, of course, the longer you've had your credit, the better. That's just how it is. Now, the fourth factor is the type of credit. Now, you can have different types of credit. You can have revolving credit, student loans, mortgages, car notes. So there are different types of credit, and this is roughly 10% of your overall factor of your credit score. And the last factor that all the credit bureaus agree on is credit inquiries. That's about a 10%. It's not as much as people think. People are like, don't run my credit, don't run my credit. But when you are applying for a loan, you usually have to run a credit so they can see if you even qualify for the loan. Okay, and this is only about 10% of your credit score. Okay, so what you want to mainly focus on is all of them, all of these factors, but your payment history and your total available credit, your credit utilization score. Keep this score between at least 30%. Okay, and we know that credit scores, they go from 300 to 850. So we want to make sure we get closer to the 350. You hear my daughter in the background. So we want to make sure we keep your credit score closer to 850. So if you have any questions, hopefully this is helpful to you in making sure that you keep your credit score where it needs to be. If you have any questions, feel free to comment below. Make sure you subscribe to the YouTube channel. If you have any inquiries where we can help you in getting your mortgage, getting your loans, mortgage loans, getting your credit score up, let me know. I also have different companies that I know that work with, even for free, to help you get your credit score where it needs to be. I'm Keanna Barnes signing off. If you have any questions, contact me. Thank you.